That and more is what we're going to now be discussing with Peter McGuire, the Chief Executive Officer at XM Australia, as well as Mitul Kotecha, Senior Emerging Markets Strategist at TD Securities. Thank you so much for joining us live right here on the market. Peter, let me come to you first. With the consumer price inflation coming in, something that we've not seen for 39 years, which camp do you fall in? With the taper being expedited, and if that does happen, what's going to be the impact on flows? Because what we saw overnight on Wall Street, despite that inflation data, was a new record high being created.
Well, good morning. Yeah, a couple of very interesting points. And if you're looking at that Atlanta Fed number that was released in the last couple of days, it's looking at 8.7% over the past quarter as far as US inflation. So from the lens that I'm looking through, I think by February we'll be above 8%. We're sitting at 6.8 for that November to November, and that really creates much angst to the Fed. And where they roll, they've got the numbers. They're looking at as far as consumption patterns. So I wouldn't be surprised to see a quicker than usual rollback as far as taper and increasing velocity as far as rate rises for 22.
I'm anchoring live. Mitul, coming to you, what's also very important to track when we talk about the equity markets is the US dollar index. What are the hints that we're getting from that?
Well, I think at the moment the dollar index, the dollar itself, seems to be consolidating. We know the dollar has been strengthening substantially in recent months and taking advantage, or really running on the back of the sharp tightening in interest rate expectations that we've seen in the US, especially the front end of the curve. Going forward, at least in the near term, we expect consolidation, even if the Fed stands somewhat more hawkish, as we expect, and perhaps doubles the pace of tapering to $30 billion per month, ending QE in March. It's largely in the price, in our view, and already the market's pricing in close to 3 rate hikes next year from the Fed. It seems hard to see how much more we're going to see in terms of pricing in, even with a hawkish Fed. So in that sense, probably may see a little bit more of a resistance in terms of further dollar strength in the very near term. And I think consolidation is probably what we're going to see in the next few days, even around the Fed meeting.
Peter, that's one aspect of it, the impact on equity markets. But what's going to happen with money markets? What happens to the dollar levels, which thereby is going to impact the equity market movement in any case eventually?
Well, if we see those 3 rate rises in 22, no doubt I think that'll put further horsepower behind the US dollar index. We've seen a very strong move to the upside, and that seems to be a very big attraction to currency traders. How many? I'm speaking to different people all over the globe. Some analysts are saying 4, and we might even see 5. So everyone's got a different viewpoint. They're like noses, and everyone's got a nose. So that's an opinion. The other side is how to contain inflation, and that really is off the Richter. If you're looking at the numbers that you used in 1980, as far as measurement tools for inflation, you'd be running at close to 15%. So if you look at the spending power and what impact it's having to consumers, it's a great handbrake. It mightn't be to the wealthy, but to the person on Main Street that hasn't had a wage rise, they've been crimped and really hit hard from all forms of their shopping basket is far more expensive today than what it was a year ago. And we've only got to look at fuel prices and the impact of those and what they're having to the consumer globally.
Mitul, in the week on by, you had the central bank come out with a status quo policy for the 9th consecutive time and an accommodative stance. I guess a lot is going to now depend in the next policy or maybe out of policy, depending on what really the Fed has to say. But suffice to say that equity markets don't like change. They're resistant to it more often than not. And while Indian markets held out quite okay in the week gone by, reacting to policy, the murmurs from the Fed are not going to be absorbed that well if indeed it talks about rate cycle changing and sooner than later, which it already has to some degree.
Well, I think that's right, in a sense that globally liquidity is tightening. If the Fed announces an acceleration in its tapering, it means that global liquidity conditions will tighten further. You've got to also come against a background where equity markets have been rising substantially, including in India in recent months, with Indian equities outperforming. And in a sense of, you then look at valuations, you look at the liquidity picture, the fact that there will be not just a Fed, several central banks globally tightening policy. It all perhaps does not bode as well for equities going forward. And that comes at a time when you've got renewed concerns about the variant Omicron and also other virus increases globally in terms of COVID. So again, that could also put a little bit more of a cautious tone to risk assets, including equities, in the next few weeks.
Everybody is aware of, but nobody knows how to model in. What happens to China and the Chinese production and the Chinese factory and the commitment towards environment once the Winter Olympics are over? You want the world to think that everything is good and green in and around Olympics, but post that, well, things could change. Peter, the question was for you. I think there is a bit of an audio problem from your end. Maybe you'll have to start the button. You'll have to press the mute button or unmute yourself. Okay. Mitul, what happens to the Chinese environmental commitment towards making China more environmental friendly? That commitment, in a sense, has capped a lot of production. There are Winter Olympics. What happens once that is over? Peter, I'll give this one more try. Can you hear me, my friend?
Yes, I can. I can hear you very well. So as far as where we're running, I think you've got to look at what happens as far as the Evergrande situation over the next couple of months. You've got to look at how that whole plays out. And there are many components to the Chinese economy leading up to the Olympics that have got to be worked through. What happens from a government standpoint? Do they come to rescue the property sector? And how many other players are there out there that have got similar balance sheet issues and sensitive, lending practices similar to what the Evergrande situation is?
Mitul, there are a lot of changes which essentially are also happening on the ESG front. How do you see that impacting the inflationary pressure more? Which is that if these ESG concerns were not there, the inflationary pressures would have not been that high. Do you think somewhere central banks would be cognizant of that? So it's not only cheap liquidity, it is about this ESG factor which is at play, which is forcing China not to export, which is forcing a lot of companies not to expand, and that is creating what could be called as a supply issue.
Yeah, that's a good point. I think clearly some, I wouldn't say significant, but at least some inflation pressures have been caused by this. And, you mentioned China, but clearly China's shift towards more or less carbon usage, more environmental production has had a big impact on coal, for instance, steel, iron ore production, and that did push prices substantially higher in these products in recent months. What we've seen more recently is a little bit of easing in China as well in terms of some of these environmental and regulatory constraints, which has helped to reduce prices. And there are some signs generally that some of these supply pressures are starting to ease when you look at freight costs, for instance, and some of these other pressures that we saw, they are softening a little bit now, albeit from very high levels. So again, some of this inflationary impulse may start to soften in terms of the supply pressures, and particularly, as you mentioned, some of the environmental restrictions that have had an impact there as well. But again, this is probably going to, if we look at the ESG and environmental restrictions, it's not like they're going to disappear entirely. If anything, this easing even in China is probably likely to be temporary.
Okay, Mitul, Peter, both of you, thank you so much for taking the time out and discussing with us.
Thank you.